Alright, so week 2 of paper trading on the Webull account. So instead of doing a weekly recap, I'm going to make the video a little bit early this week because something happened today. So in the United States, we have something called a pattern day trader rule. So you can only do 3 round trip trades in a 5-day period, so 5 business days. So essentially what a round trip means is 1 entry and 1 exit in a 1-day period. So if you place a trade 2 minutes before the bell, market closes, and then you exit the position the next morning, that's not considered a day trade. If you enter the trade and then close the trade during the same trading session, that's considered a day trade. So it will also rack up multiples. If you have multiple entries and a single exit, it will add multiples. So essentially what happens then is your account gets locked. So some accounts will actually prevent you from placing the trade. Some will just lock the account for 90 days, or they'll ask you to deposit $25,000. So there's a $25,000 minimum requirement to day trade. So if you want to trade at a frequency higher than the pattern day trader rule, you have to have $25,000 in the account. It's basically a way to protect the little guys from over trading and then blowing up their accounts. So essentially what happened with me today was I was trading GSAH, and this is a SPAC play, and I'm not very familiar with these, so I know that it was up and doing pretty well over the last couple days. So what I was looking for was a 15 level breakout with a stop loss at 1450, and it started looking like it was holding that 1450 level, so I started to add to the position with 1/3 size. So I added 1/3 size, and then I added another third, and then I ended up taking it off. So that would have been 2 trades. And then it started to look like it was doing well towards the middle end of the day. So I ended up scaling into the position again, and it started to go against me. So I took it off. So here is the GSAH daily chart. So you can see I was going to go in with 60 shares, and I wanted to scale the position, and I was going to go half size, but I actually went 1/3 size with a stop loss at 1450. So what I was going to watch for was a consolidation on the 50 EMA on the 5-minute chart for entry, because this is just up on 2 daily candles, so you couldn't really see much. So that's basically what I saw here. I saw it consolidating around this 1450 level and holding and starting to go higher. So I ended up adding at like 1460. It went a little bit higher, added at 1480, and then I was kind of waiting for this 15 breakout. So it did come up and it tested 15 perfectly, came back and bounced off the 50 EMA, and then it started to look like it was going to go ahead and break out, which it actually did. So you can see on the 1-minute chart, came up, tested 15 a couple times, bounced off 50 EMA, tested again, looked like it was just going higher and higher. So it did have a nice clean breakout. It went all the way up to 15.16, pulled back here, and then I added again at 15.14 because it looked like it was going to hold. So came up here, rejected at like 15.15, 15.16, and then it ended up failing the breakout. So if you look right here where it says C, this is where it closed. So if I look at Friday, it closed at 15. So 15 was a pretty important level. It was the previous day's close, and it would also mean that it was going to go green on the day. So it had a pretty strong breakout past 15, and it went green on the day, and then it failed. So that's 2 signs there that it's not very strong, and it was probably going to fade the rest of the day. So once it rejected and couldn't hold above 15 and couldn't stay green on the day, I took half the size off and let it start to fade a little bit, and then I took the rest of it off. So I feel like the risk management was really good on that one. I only ended up losing like $18 on the day. But because I was scaling in and scaling out and managing the size really well, so it ended up hitting me with what would have been considered 6 day trades. So this can get you kind of into a pickle because I also did enter another trade today. So you can see down here I'm currently in 2 different positions. This is still the short I was holding from the previous week, and then I did enter this HBI trade today. So if you enter a trade on Monday, it started to go against you and you got out 1 trade, and then you decided you were going to scale in. Maybe on a Tuesday you decided you were going to go half size and then full size on a position, and then you ended up exiting the position that day. That would be considered 2 day trades because you had 2 different entries and then an exit. So that would be your 3 limit for that 5-day period. So now for the rest of the week or the rest of that 5-day period, any trade that you enter, you cannot exit without violating the pattern day trader rule. So that would just be something to consider if you were looking at entering another trade, because you might get yourself into a situation where you can enter the trade, but you can't exit the trade. Like I said, some will physically limit you from violating that rule. They won't let you exit the trade, or you'll be thinking mentally in your head that you can't exit that trade. So even if it's a losing position, you might hold it. And I've been in that situation like 5 years ago when I was trading. I was using Interactive Brokers at the time and ended up entering a position that I couldn't get out of. You kind of feel like you have to hold a loser overnight just so you don't violate that rule. So you might end up taking a bigger loss than you had planned on just because you don't want to lock your account or have to deposit $25,000. So I felt like that was important. Wanted to go over that today. I am holding GOEV still. That was the one that I'm holding short. I've been holding it for about 4 days now, just kind of letting it fade, and it started to come into what could be some support at 1450, so I took it off around 1462. So I'm still holding what would be 1/6 size now, and still up on that one. I did enter HBI. This one was like a nice channel consolidation here, and then it went sideways, and I was looking for a breakout of 18, holding above 18 and confirming. So that's basically what happened today. It went above 18, pulled back, held 18, and now it's continuing to go up. So I'm just going to hold that one for a little bit. I am going to still trade the account the rest of the week instead of not trading because I violated that rule. I did document it on my log, and it's something that I'll just have to keep in mind. I did like that strategy though, because you can really widen out your stop if you have a third or a half size. You can kind of let it work a little bit more, and as it started to go against me, I was minimizing the size, taking half off, take a third off, so you're also minimizing the loss if it's going against you. So I feel like that's a strategy I'd want to use later on, but while under the pattern day trader rule, I'll just have to be pretty precise with the executions and monitor the trade count if I do any scaling. So that's it for this one. I'll be back at the end of the week.